Now, I'm not necessarily the biggest fan of ultra high yield. There's different stocks or ETFs that yield, say, north of 10, 20, or 30%. And this is just because most times, at least, these sort of ETFs or stocks don't have consistent payout amounts. And a lot of times they navigate like crazy, making your underlying investment value simply go down the drain. But what if I told you there's an ETF that I've been looking into / buying for a while now that does offer around a 30% yield? Yes, 30% yield. And it has literally no NAV decay since inception. Now, the best part of all is that depending on what your outlook is for this specific ETF, it could be a massive buying opportunity, again, depending on what your outlook is. Either way, in today's video, we're going to talk about this ETF. I'm going to share with you guys what it is, how it works, some of the risk involved, and what I personally think of it. So if you're interested in a 30% yielding ETF that has no NAV decay and literally nobody talks about, well, then make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now, maybe some of you guys guessed it, the 30% or 31.95% distribution rate ETF that I'm talking about is none other than ZVOL or ZVOL, the Volatility Premium Plus ETF. Now, before you say this ETF looks a bit scary, I mean 32% yield, volatility, just trust me, keep listening, let me explain how this ETF works and how it's been doing this. It says right here in the fund description, now with monthly distributions, the Volatility Premium Plus ETF or ticker ZVOL seeks to provide a monthly income stream and alternative source of diversification while monetizing the premium in the VIX futures term structure. Now, ZVOL aims to provide daily investment results that correspond to daily performance of the S&P 500 VIX Midterm Futures Inverse Daily Index before fees and expenses. Now, this is by no means a tiny ETF. This ETF is almost at 20.5 million in assets under management, and this is for an alternative ETF. The ETF started trading back in April of 2023, so especially for an alternative investment, we do have a decent amount of time frame to go off of to look at how the ETF has performed historically. Now, again, the ticker symbol is ZVOL, and the expense ratio, well, it's pretty steep at 1.35%. Now, to understand what this ETF does, just like it said in the strategy, this ETF shorts the volatility index and by doing so offers a boatload of distributions to investors. Now, right here in the top holdings, you can see the CBOE VIX futures in different time frames, June 25th, July 25th, August 25th, and September 25th. Now, there are different ETFs out there that do similar things like SCHD that might have some exposure to shorting the volatility, but ZVOL shorts the volatility, and basically that's it. Now, before you say, well, shorting the volatility, that means that this ETF does well when the volatility is low, and that's exactly correct. Over the last year, volatility, or the VIX, is up almost 40%. So I personally have been buying a ton of ZVOL over the last few months because I personally thought that the volatility in the market was going to be sort of zapped for a while, and volatility was going to be sucked out, but exactly the opposite has happened. And although we haven't seen the most crazy volatility that we've ever seen in a while, just back in August, we did see the VIX spike to over 38, which was quite a big spike. Now, in the last year, you can see that ZVOL started trading at $23 or so per share, and now is in the 17s. But keep in mind, if you max out the time frame, if we look at how ZVOL has traded since April of 2023, this ETF started trading in the $14, $15 range and now is at around $17.50. So it still is up around 18% as far as price return goes. Now, again, over the last year or so, because volatility has been pretty crazy, I'm not gonna lie, ZVOL hasn't had its best performance whatsoever. But I also did say during the intro of this video that if you, just like I, think that volatility is still generally speaking going to be at bay throughout the next year and beyond, then ZVOL is not only going to pay you a bullet of income every single month, but potentially even grow in price. Now, if volatility stays around like it has been, ZVOL, because it shorts volatility, is going to be in some trouble for a little bit longer. Now, this is exactly why I use ZVOL or other ETFs like these ones as more alternative investments. I personally would never in the world use an ETF like this one to build up my entire portfolio, but just to have some shares here and there as sort of a more risky pillar of my portfolio, I personally see nothing wrong with that. And this is especially because, like I said, I'm still bearish on the VIX. I still think volatility is going to go away very, very soon. But enough about the volatility for a second. Let's talk about some of the income generation that ZVOL has had over the past year or so. If we look at every single distribution in 2024, your eyes are seeing correctly. 48.5 cents paid out every single month on Q, which is a boatload of income generation for an ETF that costs around $20, or as of right now, around $17 per share. Now again, shorting the VIX can be lucrative, but also very risky if the VIX spikes. So during this time frame, personally, I've been buying a lot of ZVOL in the $20 range, which I'm now down on my shares. But to be fair, with all those distributions, I'm actually up on my shares, which is not necessarily something to be bragging about, but it is what it is. Now, the other crazy thing is that the annual payout amount trailing 12 months for ZVOL is $5.82, and that's for every single share that you own. So like I was saying earlier, across my portfolios, maybe I own 300 or 400 shares, let's say. That means that in the last year or so, I would have been paid around $2,000 just in income for an ETF that I spent several thousands of dollars on buying. Now also, if on the max time frame we compare ZVOL's performance to the SPY, again, during the early days of ZVOL, volatility was very, very low, so shorting the volatility index was very lucrative, and you can see ZVOL in the blue here was outperforming the SPY by a massive, massive margin, all the way up until volatility spiked and ZVOL saw its first massive, massive dip down to $15.07 per share. Oh yeah, maybe I forgot to mention that, guys. If the volatility index spikes like crazy, and I mean like crazy, which is what we've seen in the past, ZVOL is going to drop like a rock. But then since then, even with some decent amount of volatility, ZVOL, if you look at all the income and the price return and everything else included, it still has outperformed the SPY by a decent margin. Now again, is ZVOL the Volatility Premium Plus ETF? Is this an ETF that I would make up a large portion of my portfolio? Absolutely not whatsoever. But is this an ETF that I've been having a lot of fun with buying, especially during days where volatility is very, very high, where I can average down and grab a lot more ZVOL, lower my average cost, and then receiving those massive 48.5 cent per share payouts every single month? Well, absolutely. But the biggest question of all, especially if you're interested in buying a short volatility ETF like ZVOL, or of course there's some others, is do you believe the volatility index is going to calm down throughout the next year or so, or do you think it's going to be spiking? Because that's going to be a massive, massive decision maker. So now that we talked about ZVOL, the Volatility Premium Plus ETF, I share with you guys some of the pros of it, some of the cons, some of the risks, and honestly what I've been doing with it so far. I'd lastly, most importantly, want to hear from you guys down below. When it comes to playing in the realm of volatility, buying these short volatility ETFs or anything of the sorts, what are some of your favorite ETFs you have exposure to? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.